Bitcoin. What's the second best? There is no second best. There's no second best crypto asset. It isn't slightly different. Bitcoin, right? Bitcoin's a bank in cyberspace. Everybody. And that's the only strategy. And at the end of the day, you can tell everybody to go fuck themselves. You can put it in your head, memorize the freaking key, blah, blah, blah. Oh, yeah, my Bitcoin, I lost it in a boating accident. If you push me too far, I lost it, it's gone, sorry. This entire idea of like 60% dominance is ridiculous, stupid, right? Like, it's stupid. The point is, if you have the superior asset, it's going up forever, Laura. Forever.
Coming up in today's review, stocks finish the day higher, inflation comes in as expected, I take a look at Bitcoin's number one man, the warning from Putin, and the classic Wall Street hustle from SnowFlake CEO. Hey, what's up guys? Welcome back to the review. And since Bitcoin's the talk of the town at the moment, thought we'd start off today by taking a look at the most vocal proponent of Bitcoin out there. That's Michael Saylor, the now chairman of MicroStrategy, who stepped down a year and a half ago as CEO to become a full-time cheerleader for Bitcoin, just going around talking it up because that's apparently where his time's better spent. And he knows better than anyone what drives Bitcoin's value, is the largest corporate holder of Bitcoins, owning almost 200,000 coins. And so you could think of MicroStrategy's stock as a proxy for Bitcoin because its underlying business is pretty much flat. Looking back over the last 5 years, and analysts expect it to stay flat going forward as well, as it's basically just a legacy enterprise software product with a couple of customers tied in. And so if we were to listen to Bitcoin enthusiasts, some of the smartest and most successful people in finance, Warren Buffett, late Charlie Munger, Jamie Dimon, all those guys are wrong on Bitcoin as they think it's garbage. And instead we're to listen to people like Michael Saylor, who apparently is the future of finance, even though he has a long track record of engaging in dodgy stuff. Just 2 years ago, being accused of tax fraud, been known to live a lavish lifestyle and brag about dodging taxes, as he's all about sticking it to the system, contributing as little as possible to society. And after the last tech bubble in late 2000, he was actually accused by the Securities and Exchange Commission of engaging in fraud back then as well, for which he actually settled for $11 million on those SEC fraud charges. But apparently he's the man leading a new financial revolution, one away from fiat currency towards an apparent decentralized currency that Wall Street has now conveniently centralized for all investors through the launch of the new ETFs. And don't get me wrong, there's nothing wrong with making a profit from riding the Bitcoin bull market. If there's one thing I've learned in my 20 plus years of investing, it's much easier to follow trends than predict them. And just looking at a long-term chart of Bitcoin here, going all the way back to 2011, we are setting up this similar pattern that we've seen 3 times before, where the market will peak, it'll fall off, base, come back up, and then break out to a new bull market. Did that again in 2013, came off, based, came up, broke out. Again in 2018, in the most recent bull run. And just measuring the size of those bull markets from the breakout point to the peak we reached. First one was huge, up 7,800%. The second bull market from its breakout till its peak got up about 1,500%. Then the most recent one in late 2020 got up about 280%. So we can see the first bull market 7,800%, the second 1,500, the third 282. So we can see the size of the advances dramatically slowing with each new bull market we get. And so we very well could break out and go on to have a new bull market. Even though in my experience, looking back in history, when an asset repeats a pattern a couple of times, the market kind of catches on and it doesn't always work into infinity. But let's just say we got a repeat of the last bull market, 282%. Well, if we broke out from this base above 69,000, 282% would take us to 265,150 a coin. And that very well could happen over the coming months, over the next year. And so like I said, doesn't matter if it's fake money, a real business, or a picture of a rock like we saw in late 2021. A trend's a trend, a profit's a profit, regardless of the fundamentals and the clowns behind it promoting it. So if you long this thing, there's nothing wrong with riding it up as much as possible with a trailing stop, and who knows, could even reach $500,000 or $1 million. But that's just the technicals. In my opinion, and this is just my opinion only, Michael Saylor is not the new god of finance. He's just a long-term hustler who's been on quite the roll. And his whole strategy of cornering as much Bitcoin as possible, going on every media show and podcast as possible, hyping it up, reeling in as much newbies and amateur money as possible, just won't pay off in the long run. And if it does, well, that's just a sad world that we live in. people like that become the most wealthiest and successful figures in finance? And is it really a world we want to live in when Bitcoin's trading at 1 million, maybe 10 million? Should we all just buy it and never sell it, and maybe we can push it all up to $1 billion a coin? And like him and other Bitcoin maximalists say, it's all about the future. Even though it's been around for 15 years, it's the future. It's the future reserve currency. It's the future global currency. Governments are going to have to buy it. It's all about these promises of the future. And so no doubt he'll keep saying that for many more years. And he's got millions of small investors following him. And just going back to the non-log monthly chart, currently trading right in this resistance zone from the 2021 highs and just going down to the daily there. Seem to be consolidating at the time. And the price of MicroStrategy is actually more than doubled just in the month of February alone. However, some of the other big crypto traded stocks like Marathon actually fell pretty hard today, down 16.5%. After their earnings yesterday. Same with Riot Platforms, down almost 10% today, and Coinbase kind of just consolidating a bit above $200 a share. And there's a look at the largest Bitcoin ETF, IBIT. Assets under management exploding, now above 8 billion, and they are growing by the day. A lot of people are piling into these things. That's what's causing the big surge in the underlying as well. However, the more these ETFs buy the underlying Bitcoin, the more control and influence they'll have on its price. And if all these ETF investors decide to bail one day for whatever reason, whether that's central bank digital currencies, new laws and regulations, or just a good old market crash, then the moves could be exacerbated from the flock of retail investors easily being able to sell on their brokerage platforms. And at the end of the day, doesn't matter what happens. These big Wall Street banks like BlackRock, they'll clean up in fees no matter what. And just moving on to today's news, pretty underwhelming print on inflation and market response to it. That was the PCE, personal income and expenditures, coming in line as expected, rising 0.3% on a monthly basis, and compared with a year earlier, PCE index rose 2.4%. And so even though it was in line with what was expected, it still shows prices did accelerate in January. Inflation's not quite where this guy wants it to be. And you can just imagine the pressure and responsibility he has on his shoulders. Like I showed you the other day, Jeffrey Gundlach gave estimates that if interest rates were to stay where they were now, in 5 years' time, the US government would be spending half of its tax receipts, that's half of its income, just on the servicing costs of its debts alone. And if interest rates were to go back up a little bit above long-term averages, around 8-9%, then the US government would be spending 100% of its revenue on just servicing its debt. And so no doubt this man is eager to get inflation down as quickly as possible so he can drop rates, allow the US government to do a huge amount of refinancing, lock in some long-term rates, which they had the chance to do during COVID, and they didn't, and help bail out the US government, which has been spending like a drunken sailor for a few years now. But all that macro backdrop is an afterthought for the stock market, still on an AI high. You can see that with stocks today like C3AI, rocketing 26% as earnings beat. And don't be fooled, they're not making money. They just lost less money than what was expected, reporting 13 cents in losses per share, better than what was expected at 24 cents. And that was enough for the market to get excited to send it up 24% today. And this is a company that now has over 5 billion in market cap after today's move, and only does about 70 million a quarter in revenue, and somehow manages to lose 64 million in income. And so no doubt, like every prior boom, Wall Street's going to cash in on this. Expect to see a lot of new IPOs coming onto the market in the coming months. The next area of interest likely to be humanoids, robots, as an extension of AI, marrying the software with hardware. And so we'll be sold promises of these guys making sandwiches for us at home anytime soon. All you got to do is buy some shares and help them grow. But don't be fooled by these CEOs. They talk a good game, but you just take a look at what they actually do with their own money. That's no better illustrated in the most recent example of SnowFlake. After announcing earnings and surprise announcement that the CEO is retiring, whilst giving disappointing guidance, with the board saying don't worry, the departure of the CEO isn't tied to the disappointing outlook. And again, this is another hugely overvalued company, 62 billion in market cap, with trailing 12-month sales coming in a little over 2 billion. So that's the price to sales of 30 times. So every dollar it makes in revenue, the market had valued it at $30, but maybe it's changing its tune now after the stock's down 18%. And no doubt, Frank Slootman, the CEO who just retired, saw this coming, done a fantastic job over the last year. Every time the price rips up, he offloads big time, selling into price strength, hyping up investors of future promises. We can see just a few weeks ago, he offloaded almost $70 million worth of stock in 2 different trades. Late December, just after Christmas, when Wall Street, media's slow, everyone's on holiday, he was quietly offloading $150 million worth of stock and had been doing smaller parcels all throughout the year, collectively selling over a couple $100 million worth of stock, dumping it onto investors who are really hoping they can make a good profit in the future. If he really believed in the stock, like all good leaders, they tend to hold on to more than they sell. And not only has he offloaded most of his shares in the company, he also did a fantastic job milking the company and shareholders with his normal salary as well, $23.6 million a year. Wasn't even there for 5 years. Company's actually lost billions of dollars in that time. Price is still well down from the IPO level, and that's why it's the classic Wall Street hustle, because it doesn't even really matter what the numbers are. All that matters is the story and hyping up investors enough, convincing the board, convincing shareholders that he deserved to be paid over $1 billion in compensation and shares. And so he's cleaned up and left everyone else to hold the bag going forward. And so I would just struggle as a shareholder in this company to be cool with that, especially with the stock trading well down from its IPO price. Company losing money all that time and him walking away with a fortune. But that's just how Wall Street works. Moving on to an issue the market seems to have forgotten about or just simply doesn't care. That's Russian President Vladimir Putin, warning that if the West sends troops to Ukraine, he may just push his big red button on his large nuclear arsenal and loves to threaten World War III if he's not going to get his way. And according to Intelligent, apparently he appears to have a lower threshold to their deployment than has ever been admitted publicly. However, the oil market's still on standby with this issue in the Middle East, even though there's a lot of supply out there. Still seeing crude oil futures hold up a bit. See that in the daily chart. Actually, just drifting higher a little bit. Got the MAs pointing up, still floating with this $80 a level barrel. However, if we were to pop above 80 and hold there, you can bet the Biden administration is going to do everything in its power to get it back down going into the November election. Don't want to see gas prices spike. Don't want to see inflation spike. We want the consumer feeling good going into November. But maybe Russia and Iran have got other ideas. So look at Fed Fund futures, pretty much unchanged. Market's still saying we're only going to get 3 rate cuts this year. June, September, and November, taking us down to 4.5%. Stock market still feeling really good in the extreme greed zone. Corporate insiders still taking advantage of that, doing way more selling than buying. Let's look at the S&P 500. Got a little bit of uncoiling of volatility, not much. Was a bit of volume there today. Small caps shaping up as well, consolidating in this big resistance zone. Option dealers were right. We were not going to get any surprises on PCE. Saw the VIX fall again. Bond yields didn't do much as well. Got the 2-year at 462. Shipping and cargo rates still holding there at multi-month highs. Gold getting a little bit of a bid here. Might have another run at all-time highs from this candle here back in early December. Chinese securities just consolidating a little bit. More higher highs, higher lows. Clean energy sector. International stock indices put in a good Thursday session. Most of them still on really good uptrends. Consumer staples still weak versus the market. Semiconductors, one of the best performing sectors today, up over 2%. Continued volatility in biotech. Worst performing sector today, down 3%. Microcaps actually breaking out today to a new yearly high. Apple looking a little soft here, maybe pushing against this support zone at 180. Big volume here today, may actually just fall through that tomorrow into next week. Rest of the big stocks did pretty well today. Amazon trading up, breaking out. NVDA looked to be climbing back up, just under $800. Tesla holding ground above its 50-day VWAP, and some of these other hot stocks trading up today like ARM, Supermicro, Palantir, and a really solid breakout in AMD to new all-time highs. Currently got a market cap of $310 billion. And look at this crazy move in Eastman Kodak. You can tell the meme crowd's well and alive. Got stocks like this up 52%, still ripping after hours as I speak. And some of the other hot stocks we've been watching continuing to trade pretty well here as well. And a little bit of a bounce back in the regional banks along with the big banks as well. JP Morgan trading at all-time highs. Alright guys, there we are for the last trading day of February. And a lot of people coming into this month were bearish. Some people convinced we're having a pullback because of seasonality, but it doesn't always work 100% of the time, especially when it becomes consensus and everyone's expecting it. We continue to grind higher. Markets are in an uptrend. Volatility is low, and we just got a little bit of PMI data coming in tomorrow. The way things are, the grind continues. Thanks very much for tuning in to the Daily Market Review. My name's Jared, and I hope to see you again tomorrow night. Cheers.